There's some very powerful forces pulling in all different directions right now in grain markets, and it's made for a pretty wild ride in 2022. This is part two of my interview with Joe Vaclavik from Grain Markets and Other Stuff. And in this segment, we talk about geopolitical risk, particularly that in Eastern Europe. We also touch on commodity ETFs and the growing trend of export controls and what that means for farmers. And without any further ado, here is Joe Vaclavik. Markets took a big dive. Grain markets took quite a hit on earlier this week on Tuesday. Seems like a lot of optimism that some kind of arrangement is going to be reached in Eastern Europe about getting that stranded Ukrainian grain out of the Black Sea. And
I don't know if I'd call it optimism. I'd say like it's just that now there's a possibility, whereas maybe 2 weeks ago there wasn't.
Okay, so just the prospect of it, because it really seemed the move down we saw, it seemed like they were almost baking into the cake that it's already out. That was quite a dip we've seen in the last few weeks. And,
okay, so my take on it would be this: before they started talking about the possibility that Russia might allow some of this grain to move out of Ukraine, the market had priced in or discounted like the absolute worst case scenario. And the absolute worst case scenario is that Ukraine ships nothing out of its Black Sea ports, and that maybe you see some grain just kind of wiggle out via rail through Europe, which is hugely inefficient. They'll never move a ton of it that way. So what you've got in the wheat market is a ton of speculative money. You've got speculative length. Some of it is your more traditional speculative length, like your big money managers and funds and institutions. You've also got a lot of small speculative length. You've got these wheat ETFs out there right now that have a lot of money in them. There's been a lot of like the general public, people who have never touched wheat in their entire lives, who now own wheat on paper through these ETFs. And I think that speculative money, whether it's a large speculator or a small speculator, I think the speculative money is really skittish. I think it's really nervous. I think that if you get any little change in the headlines, that speculative money is very sensitive. So I think you've seen some of that speculative money come out of the market. I don't know that that Russia's going to do anything to allow Ukraine to ship wheat or any other crop for that matter out of those Ukrainian ports. I feel like, and this is maybe a geopolitical thing, and I'm not an expert on this, but Putin and Russia, they've got leverage here with this grain thing. I mean, the West continues to slap sanctions on Russia, right? I mean, Europe just banned Russian crude oil imports. That's a big deal. So Putin and Russia, they have some leverage here with grain. The United Nations and the United States and all these developing countries in particular who rely on Russia and Ukraine rather for wheat. I mean, they need to get grain out of the country, out of Ukraine. And Russia knows that, and they know that they have kind of an ace up their sleeve there, maybe. So I don't know if they're going to allow these exports without something in return. I don't think the West is willing to give them something in return, but it's a big unknown right now. It's a big unknown.
yes, I certainly sanctions relief sounds like something the Russians are going to demand, or possibly even, a cessation of the flow of weapons into Ukraine.
Yeah, that would be my thought, but you can't say like never. I mean, maybe Vladimir Putin does have a heart and he decides that he doesn't want to let the third world starve. I mean, I'm not on that page, but again, I'm no geopolitical strategist. Other people might think differently.
Yeah, I wouldn't exactly go along Vladimir Putin's good intentions.
No, I don't think so. I wouldn't either, man.
So we saw quite a big move in grain. Was it 2 weeks ago? There was a story that India was going to limit its exports. That against the world, there was a lot of optimism that Indian grain was going to come in with this bumper crop to offset some of this Ukrainian losses. And then we had a drought hit northern India, and it looked like some of that went up in smoke. Big spike in markets, and then just as quickly as it came, we rallied back down because India seemed to kind of backtrack on that and say, we're still going to deliver to some of the countries we contracted with. You have any color to add to what's going on there with that story?
The India wheat headline is what topped the market. So we rallied initially on that wheat headline. We weren't able to hold the gains. We reverted lower, and we've done nothing but sell off since. India was never in itself going to save the world from its wheat problems. It doesn't have the capabilities to export that quantity or a material amount that would be enough to offset Ukraine or Black Sea or the US production shortfalls. It was a nice story. It was a nice friendly headline that, if you're somebody who's bullish wheat, India is going to ban wheat exports, that's bullish the market, maybe to some extent, but not not to a material degree. So it was that headline, as a matter of fact, that topped the market. And I'm not saying we can't go back to those highs, because I think we absolutely could if the geopolitical stuff goes the wrong way, I guess. But I never saw that as being like a big story. I talked to customers about it, and I talked about it in the podcast and everything. And I kind of said, like, India is a big wheat producer, but they're not a big exporter. And even if they were to do an extra couple million metric tons, I mean, I just don't see that as being I never did see it as being a game-changing item. But again, the market's really sensitive. I mean, it reacts to everything, and that was just another thing. And in that case, was bullish. And in more recent memory here, these just the talk about potential exports out of Ukraine and those ports is bearish. It doesn't take much.
Another thing you touched on, you talked a little bit about retail investors and
Yeah.
ETFs and how that may have accentuated some of these swings up and down in
Yeah.
recent months. Just talk a little bit about the market mechanisms. How does a retail trader in Robinhood or TD Ameritrade, how does that impact wheat prices?
Okay, so I've been working in the commodity business for years and years, but I've never touched a commodity ETF in my life. I do have an understanding of how they work. So basically, you buy into this ETF, and the ETF owns futures contracts, and kind of on your behalf, essentially. There's a lot of problems with commodity ETFs in general. What you'll see is that they're typically going to have most of their length in like what we call spot month contracts or your nearby contracts. And in a lot of instances, in the majority of commodity market instances, you're going to have what we call carry in the market, where your spot month may be the cheapest contract on the board, and then the contract that they have to roll into might be priced slightly above that. So when the ETF or whoever manages it has to make that roll, they're going to lose money every time they make that roll. In this instance, we've got what we'd call in the commodity business an inverted market, meaning that your spot month contracts are trading above your deferreds. So that's actually a good thing if you're in the ETF, I guess, because they're going to hold a lot of their length in these nearby contracts, and then when roll time comes around, they're going to get to buy a cheaper contract, a cheaper price deferred contract. Now, that's not a guarantee that you're going to make money by any means, because a lot of times these inversions collapse. A lot of times the markets could stay inverted, but flat price could move drastically lower. Like in wheat, for example, the Chicago wheat contracts, which is SRW, that July contract is at 1040. You could drop down to 940 and the market could still be inverted. So, the market lost $1 a bushel, and maybe you get to roll at an inversion, and that sounds nice, but I mean, it's still not going to end well for you. So this is much more complicated than just watching the spreads. The spreads are only like one little factor that makes holding these things really difficult to do over any given period of time. But the flat price movement is still going to be the much bigger issue.
So you were touching on contango versus backwardation there a little bit, especially with these ETFs, and they do make lousy long-term holds for exactly that reason.
Yeah,
We
you would
talked
never
about
want to
that.
hold those things for, like, if you have a short-term, idea, or you think we're going to rally on weather, or you think, you want to play the geopolitical stuff, then I suppose that they're fine. And again, it's not a recommendation. I've never touched any of that stuff. But long-term, no, you don't want to be in any commodity ETF long-term, not in my view, at least.
Now, we've actually been in backwardation for quite a while in some of these corn futures, wheat to a lesser extent. We touched on that last year a little bit in spring of 2021. You mentioned the seasonality.
Yeah.
To go into backwardation very briefly, we came out of it, and then prices came down pretty quickly.
Yeah.
Have you ever seen a scenario where this inversion or this backwardation in agriculture futures carries for a significant period of time? Because we've been in this now for about 3 months.
Oh yeah, you could see inversions last. You call it backwardation. I call it invert. Backwardation's like the textbook definition. Like if you looked it up on Wikipedia, they'd call it backwardation. In the markets, we'd always call it an inversion. In any case, yeah, I mean, it could last for a really long time. You could stay in inverted markets for months, for years. I mean, it's very possible. So when the market's inverted, when your spot contract is trading above your deferred contracts, that's a characteristic of a market that has a tight supply and demand situation. Supplies are tight, demand is strong. We're not very well supplied. We're not comfortable. When you get into a market that offers carry, or contango would be the textbook definition, that's a market that's more well supplied. It's a market where the balance sheets are comfortable. We don't have big crop issues. We don't have droughts. We're functioning normally. That would be normal. What we're seeing right now is not normal. the market's being inverted. Your spot month contracts or nearby contracts trading above your deferred contracts. That's not normal, but it can stay abnormal for a lot longer than you think. And if there was a period, if there was a time frame for it to stay abnormal for a while, it's probably right now. I mean, a lot of these issues just aren't going to fix themselves overnight. You can't grow big crops overnight. It takes time. You can't get Ukrainian ports back online. It takes time. A lot of these countries around the world are acting in the name of food security, and they're, banning exports and restricting exports, all sorts of things. So this is one that could last for a while. Could last for a while.
Yeah, speaking of the restriction of exports, that's something we've also talked quite a bit about on my channel is this breakdown in globalism that we're starting to see, in particular in food markets, as
Yeah.
a lot of governments try to controlling their prices within their own borders. How do you see that playing out long term? If that trend were to continue, if countries continue restricting exports to suppress demand, I mean, doesn't that kill the farmers' margins? Because the farmers are still paying your higher input costs, your higher fuel, your higher fertilizer and labor, but now they can't sell into the more lucrative export market. So what does that look like if that continues long term?
Well, it depends on who you are and where you farm. Here in the United States, we have no restrictions on exports. We are, agricultural goods are one of the very few things that we still produce here. So we're a net exporter of everything when it comes to agriculture: corn, soybeans, wheat, beef, pork. I mean, everything. So for the United States and the farmers here, it doesn't or has not made a difference. If anything, it's been a positive for them, because you could probably argue that, like, when a country like India restricts wheat exports, it makes the markets go higher, right? Now, if say the White House did something stupid and decided to restrict grain exports out of the United States, yeah, then you've got a disaster on your hands. And then you're in a situation where the cost to grow a bushel of corn just went up 20%, but now all of a sudden a good chunk of our demand base is gone because they've eliminated exports. I don't think that's going to happen. I think the odds of that happening are very, very, very low that it would happen here in the United States. It has been hugely detrimental to farmers in countries that have banned or restrict exports. It will impact them without a doubt, and you're going to see all sorts of fighting between grain farmers unions and governments and things like that in other countries. I really, really doubt it happens here in the United States, but never say never, I guess.
So we're almost out of time here. If there was one variable, one item that you would track right now, I mean, with grain markets, is this a geopolitical story? Is it a weather story? Is it a fertilizer story? What would you say right now is the biggest driver pushing grain prices?
It's half and half geopolitics and half weather, I think. And it depends on the crop too. So wheat is a crop where most of it is on, it's winter wheat. We planted in the fall. We're going to harvest it this summer. So it's already, the crop kind of is what it is at this point. I mean, we don't know exactly what it's going to be. So weather is not as big of a deal there as it is in, say, corn and soybeans. So I'd say maybe corn and soybeans or our spring crops. I'd say weather is probably the biggest deal this time of year. And that's for any year from, say, when planting begins in April, for the most part, through July and into August even. That's weather market season. That's when the market can move drastically just on a minor shift in the weather models. The wheat, I would say, is more maybe a geopolitical deal with this Russia-Ukraine stuff going on. I feel like if there were some sort of big escalation in tensions, you could very easily see fresh highs in the wheat market. You could see a $2 or $3 per bushel rally just in the course of a week. Whereas in corn, that's probably not how it works. If you see an escalation in tensions, corn would rally on that too, because Ukraine is a big corn exporter. But I think wheat would probably be affected a little bit more drastically. So I'd say it depends on the crop. For the spring crops, for corn, soybeans, spring wheat, weather's probably your bigger deal here. For those winter wheat markets, your HRW, Kansas City wheat, your Chicago wheat, maybe the geopolitics is the bigger deal.
All right. Excellent. That's great stuff. Now, real quick before we wrap up, where can people find your work? Tell us a little bit about, if they want to know more, your channel, your podcast.
So I do a podcast and a YouTube video every single day. I've got a podcast. It's called Grain Markets and Other Stuff. And I've got a YouTube channel by the same name. And I post a new video or podcast episode pretty much every business day. They're up real early. I'm on Central Time, but they're up by like 6:15 a.m. Central most days. And I run through the headlines every day. and then I kind of provide, a quick, thought on each one of the headlines is what I do. And most of the videos are kind of short and sweet. They're 6, 7, 8 minutes long at most. And I do that every day. And then, my day-to-day stuff is working with, all my customers are farmers in the US for the most part. I've got a lot of newsletter subscribers who are all around the world, but I do a lot of consulting and I still do brokerage business. But if you're interested in some more info and you want to know what's on my mind every day, I mean, it's out there for free. The podcast and the YouTube stuff, there's a lot of information there.
Outstanding. And before we wrap up, I got to send a shout out to Rich S on my Discord server. Thank you, Rich, for recommending Joe's website. When I found that, I was blown away. It's some of the best detail in the ag space that I've seen anywhere on YouTube. So
I've never been on Discord in my life. I must be getting old or something. I don't know.
Well, the people who are on Discord are also on your channel because that's where I found you. And I'm glad they did because there's great stuff there.
Cool.
All right. Again, it's Joe Vaclavik from standardgrain.com and grain markets and other stuff. Joe, thanks a lot. And folks, until next time, live small and dream big. And folks, I just want to remind you that this is part 2 of my interview with Joe. There's a link down in the description below to part 1. There's also links down below to Joe's website, standardgrain.com, and also his channel, Grain Markets and Other Stuff. Till next time, live small and dream big.